It's 10 a.m., but this time it's not from Lagos. It's coming from the Federal Capital Territory, Abuja. I'm Ini John Mekwa, and I'm reaching you out from Abuja today for a change, I guess. Let's put some spice to it. But it's still 55 minutes of current and relevant business conversations. That's what we're going to do here from Abuja today. So let's get right into it. As usual, we begin with what's going on in the global space. Telling you about global oil prices. It extended losses on Wednesday in Asian trade after falling by more than 3% to 6-month lows in the previous session on oversupply and demand concerns. So Brent crude futures for February fell 33 cents. That's about 0.45% a barrel. And U.S. West Texas Intermediate crude futures also dropped for January by 29 cents. That was 0.42%. That's a huge drop, almost 0.5%. And the market stumbled in overnight trade as firmer than expected U.S. inflation readings. We saw that making the news all over yesterday. The inflation rate for the United States, it bolstered the view that the Federal Reserve, which is expected to announce the decision today that they will cut interest rates early next year. Not sure about today. A lot of people still think that it's going to be a upward of the interest rates, and this could weigh on consumption. Meanwhile, the weekly average of Russian crude export jumped to the highest since July. That's talking about global oil right there. Now let's go over to what's going on in the grains area. Chicago soybeans futures has lost more ground on Wednesday, with forecast of rains in parts of Brazil's dry oil seed producing areas easing concerns over dry weather conditions hurting the newly planted crop. Corn and wheat slid that's the futures. They slid, and rains are expected to dry areas of Brazil, which have taken out some of the weather premium from the market. Looking at the fundamentals now, the most active soybean contracts on the Chicago Board of Trade was down 0.2% for a quarter of a bushel. And corn also lost 0.2% for a quarter of a bushel. Wheat slid 0.1% for 3/4 of a bushel. Heat and dryness have hurt crops in northern and central parts of Brazil. But analysts say that some forecasts on Tuesday looks wetter than previous outlook. Now let's come to Nigeria. Now, unfortunately, it's not such a good news, because the Nigerian National Petroleum Company Limited, the NNPCL, has said that the country has recorded 127 crude oil theft incidents in 1 week. And I thought we're over with this. Unfortunately, we're not. Between December the 2nd and the 8th, the NNPC Limited, which made this known in a report via its Twitter account, revealed that during the reporting week, 51 illegal refineries were uncovered, 29 illegal connections were identified, 8 vessels were found as automatic identification system infractions, and 6 acts of pipeline vandalism were detected, among others. The state oil firm stresses that these crude oil theft incidents occurred across various locations in Bayelsa, Rivers, Delta, Abia, and Imo State. Now, still staying in Nigeria, but away from that, real estate firm that boasts of its expertise in delivering high-quality project and long-term payment plans has delivered Montego Garden 4 and Montego Bay 3 in the Ogbomo area of Lagos State, Ogombo area, beg your pardon, of Lagos State to subscribers. The managing director of the company says that the vision of the company is to grow people first and then support government through impactful housing programs. Guests at the occasion include the Oni of Ife, Obadeye Ogunwusi, Ojaja II, among others.
It's a busy day for members and staff of Henry Montego Homes as the real estate company delivers on its promises to subscribers. Construction of the Montego Garden 4 and Montego Bay 3 started in 2020 with a 5-year payment plan for subscribers who today now own a piece of the earth.
This estate is one of the most affordable estates in the whole of Ajah presently. Some people bought this estate for like 30 to 35 million. But currently, we have successfully helped them to build equity, because now this property is going for nothing less than 75 million. I can tell you that, within the space of 2 years.
For many of these clients and associates who have come to celebrate, Henry Montego Homes stands for affordability and luxury with great attention to quality and details.
We take a lot of time to give the best in terms of construction.
Within a couple of hours, you can close the deal and you can be a homeowner with zero down payment, with 5 million as a deposit, and then spread your payment across 8 years. And you can take possession of these homes 18 to 24 months when the construction is completed.
The icing on the cake is the visit of a royal father, the Oni of Ife, who has come to identify with Henry Montego.
Payment plan of 10 years with all this inflationary trend. Despite that, Henry Montego is still doing it. So for me, this is what we need in Nigeria, and that's why I came to support him. The major problem we have in Nigeria is housing. It's a problem that government cannot even solve. So the likes of Henry Montego, they're even doing what government is doing. So kudos to the company and the promoters.
With the Montego Bay 3 and Montego Garden 4 opened, subscribers can start moving in while payment is still ongoing. And the management says everyone is welcome to take advantage of this unique opportunity.
All right, you're welcome back. Of course, we say congratulations to them and to the subscribers of that. Now, back here in Nigeria, and even right here in Abuja, the conversation around illicit financial flows is brewing, and that's because the AFDB, African Development Bank Group, has brought that conversation to our faces, if you could say. They're holding a training for government officials right here. The training is on and should be concluded in tomorrow. That's when it should be concluded. So we have joining us to tell us about that, what they've been doing, and why exactly this is important at this time. Professor Kevin Urama, he's the Chief Economist and also the Vice President for Economic Governance and Knowledge Management with the African Development Group. Thank you so much for joining us, Professor Urama, this morning.
Thank you so much.
Yeah, I must say, normally I would be in Abuja, in Lagos, and then we'll be doing this kind of virtual, but it's good to see you in flesh and be talking to you right here from our Abuja studio. You're welcome to our Abuja studio.
Thank you very much for having me.
All right. So, for a lot of Africans, once we hear illicit financial flows, it sounds very familiar, something we've been talking about, something we are facing as a people on the continent. So I guess this would tell us why you have decided to hold a training for government officials, I believe, on this. Tell us about that and how you hope to make your training impactful. So it's not just another sit down and talk time.
Thank you very much for having me. The subject of illicit financial flows is part of a larger training program, executive training program that we have within the Public Financial Management Academy of the African Development Bank Group that was set up in 2021. And that is basically set up to help countries in Africa to build their capacity to be able to mobilize domestic revenue, to be able to plan for expenditure management, but also to be able to manage leakages in the whole public financial management system. So that training has been going on for 18 months, and I'm pleased to inform you that we have about 52 government officials from about 26 African countries who have qualified to graduate as public financial management experts, including the final training that is happening now, which is on managing illicit financial flows in Africa. And these 52 graduates that we have comes out of 145 nominees that we got from about 45 countries when we started that training program. Now, why is it important? we know that illicit financial flows and bad management of public finances has been a major challenge, not only in Africa, but also globally. In Africa, we're currently losing over almost 80 billion, almost 90 billion US dollars annually on illicit financial flows. And that happens through several ways that money flows out of economies illegally. And blocking that will help to retain a lot of revenue for African countries to be able to address most of the fiscal challenges that countries currently face and continue to face. So you ask, how are we going to make this impactful? The reason for us to focus on public financial management officials, debt management officials, people who are working in the budget offices in governments across the continent is precisely for us to be able to tackle the issue with the people who are doers, who are really supposed to be the regulators, the people who manage the approvals and initiations and dissemination of everything relating to public financing on the continent. And I have to say I've been very impressed over these 18 months to see that several African countries have really put in very stiff laws and regulations that allows them to be able to track the flow of capital, both internally and also the flow of capital that comes into the countries. Because when we put prudence in managing how finances are used on the continent, we'll be able to address that illicit flows and keep that over 90 billion US dollars to add to the revenues that we need for education, for health, for other things that governments have to do.
Yeah, so I think one question that comes to mind is, can we really say that the missing link in dealing with that $90 billion you talked about, the leakages, can we say that the missing link was or has been a training, or can we say is the willpower? It seems a lot of individuals that hold these public offices, they actually know what to do, but decide to do what satisfy their selfish desires and needs over what would help the country and block the leakages. So is it really training that we need, or the willpower?
Now, yes, having the political will is always central to implementing any reform agenda in governments. But again, building the capacity of the institutions and the key actors in the institutions helps quite a lot to hold public officials accountable. Because if a debt management officer knows exactly what needs to be done and the implications of not doing that, there's that likelihood that they will give the right advice to political office holders, and maybe the political office holders will be able to listen to them. That's number one. The other one is also that the capacity building we're providing is not just training individuals. It's also training them on the use of tools that makes it really difficult for the leakages to happen, like digitizing the tax administration processes, like having the integrated financial management, IFMI systems in countries, because quite clearly it is normally in the interest of individuals to seek self-interest. But as institutions, as governments, when you put the rules and regulations and institutional processes around that, it becomes more difficult for the public officials to act out of the law. And it's not because Africans or African leaders are more corrupt than any other leader, but because the institutions are weak and the regulations are weak, then it creates loopholes that allows people to pursue self-interest. But what we are doing alongside the training is also providing policy-based operations that will help countries to build those infrastructures that are required to make it more transparent on what is going on with public finances around the continent.
More Africans will be more interested in your training if it covers issues like cost of governance. In Nigeria, for example, we've been talking about the need, because of the austere period that the economy is facing, of cutting the cost of governance. Does this cover it?
One of the major aspects of public financial management is actually public expenditure planning, budgeting, and prudential management of public resources. And that is where, when you do appropriate budgeting and planning of your public financial, of public resource use, you will be able to identify what's the size of capital expenditure and recurrent expenditure that are necessary in order to make that economy productive. So the issue about size of government is always subjective depending on the situations in those countries and particular issues with regard to the budget planning and how that is done within countries. So my simple answer is yes. That was the second model that we had in the Public Financial Management Academy that we have been having with these countries. We have had 6 major training programs with them. One is on mobilizing resources, domestic revenue mobilization, how to improve the tax administration system. The other one is on prudential planning for budgets and public expenditure management. The other one is prudential debt and debt sustainability management. The other one is on macro fiscal planning and budgeting. And then the one we are doing currently is on limiting, on managing public illicit financial flows in public resource management systems.
So does AFDB follow up to ensure that the lessons you have imputed is not wasted, doesn't just end with the training and the celebration around it?
Yes, the African Development Bank is a very robust organization. We have several complexes in the bank that is focusing on operations. We have other departments within the economic governance and knowledge management complex, which I head, that is called a strategy for economic governance in Africa. And what that department does is actually following up with countries on policy reforms and agendas, monitoring the progress of these reforms and agendas. And one of the tools we are developing, which will be launched next year, is what we've called Public Service Delivery Index, which is going to create a transparent indicator on how public servants are delivering on the services promised to countries during their tenure and regime. And that is something we're doing with the African Union Commission and several coalitions of institutions. So it will create incentives to have a transparent monitoring of how public servants are managing their budgets, how finance ministers are delivering on their mandates, how central bank governors are delivering on their mandates. And that, we hope, will allow us to also create a prize for public service delivery in Africa, creating a positive incentive for countries to do better.
It would be nice to have this index, when you've done a survey of each country, and then just throw it out there, especially, I'm sure the journalists will jump on it, and then we can use that to speak or tackle our government, as individual countries that are connected. I'm sure it will move some kind of conversation.
Precisely that. We have actually completed a survey of all the 54 countries in Africa on that public service delivery index. And we have recently had regional consultations. I think we had one in Nigeria and in Tunisia, in South Africa, everywhere, consulting with public officials and civil society to ensure that that index is comprehensive enough to capture what citizens really care about. And that index will have 2 sets of indicators. One is the output indicator, which you measure based on the statistics provided by countries, the national bureaus of statistics, but also we have an outcome indicator, which is actually measured by public perceptions of public service delivery in all the African countries. So I really look forward to the launch of that index, because it will help us to have a very transparent benchmarking on how countries are doing at national level, at regional levels, at ministerial levels, but also down to local governments and states. So it's possible now to be able to see that country A or B is doing better and therefore deserves a prize for doing better. So it builds on the Mo Ibrahim Governance Index, which was also established with regard to doing that, but focusing on political governance alone. So with all these efforts, training the public officials on what to do, providing them with the tools they need to do that, but also providing a transparent and independent measure for managing that, monitoring that will quite a lot help. And the other thing that is happening is, because we're like the Public Finance Management Academy, we're actually running this academy with the IMF, with the World Bank, with OECD, with UNCTAD, with all the agencies that are interested in development on the continent, but also with universities and public finance management think tanks across the continent. So it's actually going to be a unanimous composite training program that is provided to allow countries to be able to move forward. And we're also working with ministers and former ministers to understand the day-to-day challenges on why these things are not happening, where the leakages are, and what we need to do as a development bank to help countries to plug those leakages.
Yeah, it's a lot that you have on your hand there, you know, because the issue of leakages on the continent is something else. But citizens, do they have a role in all of this?
Yes, like I said, on the public service delivery index, it's actually the outcome indicators that I personally will be looking forward to in terms of how citizens measure the performance of their public officials in the different aspects of public service delivery. And then also in the Public Financial Management Academy that we're running, yes, we're also having sessions where we work with CSOs and youths and women on the continent to get their views with regard to how to make these improvements happen on the continent. One of the things that the African Development Bank prides itself in doing is trying to ensure that whatever we are doing with countries is owned by the countries. It's actually the people in the countries that actually informs our work and shapes how we work with countries, because unless policies and reforms are embedded in the national realities of countries, quite often it becomes difficult to implement.
Yeah, I agree with you. But we wish you all the best in your training, but certainly the more important aspect will be afterwards, after the celebration, the ceremony, and the graduation. You know, let's see what difference this has made to governance.
Yes, we actually have KPIs, key performance indicators for the graduates to ensure that we see improvements in tax collection in their countries. We see improvements in the prudence with which the budgets of countries are done and how the public finances of countries are utilized. So we'll be happy to talk to you sometime in future with regard to the progress we have seen.
We will certainly look forward to that. Thank you so much, Professor Kevin Ramadi, Chief Economist and Vice President for Economic Governance and Knowledge Management with AFDB.
Thank you so much for having me.
All right. Okay, still Business Morning for a change coming to you from Abuja. Let's take a break now. When we come back, AFEX will be on top of our minds. Just stay with us. It's AFEX time now on Business Morning. So let's bring you up to date on how the market traded up to December the 11th. And we see that in the last trading week, which ended on the 11th, December the 11th, there were mixed performances across key indicators. Looking at the turnover, that dropped by more than 1%, 1.04%, closing the week at 2.23 billion naira from 2.4 billion naira in the last trading week. The volume of trades also witnessed an increase, almost 1%, 0.93%. Number of deals dropped more than 1% for the red week, 1.19%, closing the week at 116 from 140 in the previous trading week. We witnessed that the AFEX Commodities Index dropped by very marginal, 0.01%, while the AFEX Export Index rose by 2.08% to close at 234.01 from 229.25. Let's look at the volume of contracts traded up to the week ended December the 11th. Right there, we saw an increase in the volume across maize, across sorghum, cocoa, and cashew nut. A positive movement among those commodities. Now, let's look at the price for each of those and see which one gained and which one lost if you're an investor in any of those crops, if you actually gain. So we'll start over with sorghum. We see sorghum right there. It's in the green. If you invested some money there, I bet your investment would have been up 1.43% to close at 425 naira for a kilogram. That's for sorghum for the week ended December the 11th. If we can see other crops right there to see how they're traded. We see cocoa dropped, however, by 2.64%. All right, we have sesame there. Sesame was unchanged at 1,240 naira 76 kobo for a kilogram of sesame for the week ended December the 11th. Ginger also is in that category, unchanged for the week at 990 naira for a kilogram for the week ended December the 11th. And then you have wheat, the popular wheat, very essential one, at 440 naira. But it seems for the week also, nothing has been able to move it. So it's still at 440. Ginger is 990. And there you have wheat right there at 440 unchanged. And like we always say, okay, we have paddy rice, also 400 unchanged. We had a lot of commodities that were unchanged for the week. Perhaps there's a balancing out coming on, and you know that the festivities are upon us. So even though we're not having as much demand as we would normally have, but things are changing. But you can go to their website and follow them on their social media handle to get more information on AFEX. If you want to know how you can get on board, be an investor in any of the commodities, and also help to boost food security in Nigeria, you can go to their website, follow them on their social media, and then you can contribute to that. So AFEX is also involved and concerned about leveraging technology to optimize the supply chain. As we know, the supply chain sometimes has led to the loss of harvest. We have in Nigeria post-harvest losses hitting as much as 50%. So AFEX is concerned about this, and so they tell us that the agricultural landscape is undergoing a digital revolution, as is with a whole lot of sectors in the country. Technology is offering tools to optimize the value chains from farming to consumption. These innovations are transforming how food is grown, how it's transported and distributed. As population growth is set to occur, it is important to understand further ways that technology could optimize this. And so we have in the studio right here, Somto Nwobodo, to tell us more about how AFEX is contributing to this. Good morning, Somto, and thank you for joining us this morning.
Good morning. Thank you for having me.
Yes, I would expect, of course, we're talking about technology, so the Gen Zs will be the one to talk about it, And we've seen technology and now AI disrupting landscape globally. Obviously, it's also doing that in the agriculture space. What do you see? What does AFEX see when it comes to technology and agricultural supply chain?
So I see technology is evolving very fast, right? It's optimizing processes, it's making things better, connecting different players together, right? So at AFEX, we're trying to leverage that and connect the players to be able to perform in the market. So we're doing that with data, we're doing that with the players, we're doing that with infrastructure, just connecting the different key components of the agricultural space and facilitating them to do more.
But obviously it hasn't been easy. You've had some obstacles.
No, it hasn't been easy. There's been a couple of obstacles. For example, we have digital literacy, because part of the people in this supply chain are the farmers, right? So, and a lot of time they struggle with understanding how to use the technology. So at AFEX, we've adopted a trainer program where we train somebody in their local community that then goes ahead to train them on how to use the technology. And we also produce very easy to use, accessible technology. So it's easy for them to actually access it, right? So, and apart from that, there's the cost of the technology. There's also the fact that they don't trust technology. There's just a couple of things, but then we've been able to tackle it with a
Tell me about
long-standing
the
reputation
lack of
stuff.
trust of technology. What are the fears?
So there's a lot of things. First of all, they feel like, oh, these people are going to come, take my money and disappear, right? And then, so they just need to, and what we've done for that is by engaging people in their community. Like we have like outreach officers that are members of their community. We have like cooperative chairmans that are members of their community. So by the time they interact with them and they're like an extension of the company, it builds the trust with the farmers and you can see the good things. We can see how we're investing in them and how we are like helping them do more. And then over time, the trust builds naturally. So that's how we've been tackling
And I know you talked about the cost of acquiring, these gadgets. I think there's also the infrastructure, because you want to charge a phone or a device.
Exactly.
You have to look for a generator, and now petrol is costing how much, These are some of the challenges that you have to deal with.
Yes, these are some of the challenges. So for the cost of technology, right, we know, okay, for them to access, like, the market, right? They need technology that is, like, they need bigger phones, maybe smartphones and the likes, right? But then what we've done at AFEX is to try to create technology that is closer to them. So with USSD codes, using their small phones, they can actually get market prices, they can trade, they can send money to other people, they can put money into their accounts, like have access to basic financial services and basic like market and information access. So that's what we've done, and that's how we are trying to help them tackle the issues that they are facing, the barriers to technology that they're currently facing.
Yeah, and another thing I think would be connecting the farmers and the market.
Yes.
I know that's normally a challenge in Nigeria.
Yes.
We talk about the connection. You can do it virtually, but at the end of the day, you have to do crops.
Yes.
So there has to be a physical meeting.
Yes, yes. So we have warehouses, right? And then in these warehouses, we have technology that actually has, like, the farmers have registered on this technology, and then they can come in and store their commodities there, and then it becomes like something that they have. They either get e-warehouse receipts, which they can use to access financing and use to access loans, or then they can have their commodities there and transact. They can sell it to different people. They can access the money just using their USSD code, which is like what we've provided for them, and so far is working really well.
Interesting. Is this, would you say this is making an impact so far, the issue of food security in the country?
Yes.
And then that gap,
yes,
between the urban, where most of the consumption is done,
yes,
and then the rural.
Yes.
I know the warehouse really should be helping,
yes,
but getting the market to those warehouses will also be another thing.
Yes. Okay. So like I mentioned before, we have Kudi and we have Africa Exchange. Africa Exchange is like the market where we have different players. We have suppliers, we have like consumers. Everybody's like trading on the exchange, right? And then the farmers can access the things that happen there. Maybe they can, if they have smartphones, they can access technology. But because a lot of them don't do it, we bring it closer to them using USSD codes. So with the USSD codes, they can easily find out what the price of the commodities they are trading currently is.
Do you do this in any language other than Lagos?
Yeah.
Other than English,
yes,
I mean.
Yes, we do. We do it in Hausa as well, which is because currently our efforts are focused in the north, and then there are a lot of people that trade, like there are a lot of people that speak like Hausa there, so they can access the services using Hausa, and then we are working on also adapting different other languages so that it's easier for the people to communicate and use the technology with language they're very familiar with.
So tell me, an investor watching this program now, what are the opportunities available for investors?
Okay, so we have the Africa Exchange, we have like basket, we have FETCs, we have commodities on the exchange that is available for them to like trade. And then we have technology. We are doing a lot of things with our technology. They can also invest in that. We are planning to go into AI, prediction farming, all of that. You get, so AFEX has a site, like we're trying to leverage AI to optimize these processes. So if people are willing to invest, they can come to the exchange, they can come to AFEX and then state their intent and become like a part of the movement that we're trying to drive.
Oh, very interesting right there. And they can always reach you on your social media handles and all of that.
Yes.
All right. Thank you so much for
much.
that. And we wish you the best.
Thank you.
So if this, or as this grows, then food security also grows in the country. And we have less post-harvest losses because that is a major setback, to our food security in Nigeria.
Yes. So by connecting the different chains, improving transparency, we're able to like curb the losses, right? So you're connecting the farmers to the distribution, the warehousing, you're connecting everybody together, right? So there's the inefficiencies and the delays are reduced. So the food security is greatly increased by doing that.
All right. Okay. Wish you more success.
Thank you.
Thank you so much, Somto Nwobodo, Analyst Product Management with AFEX.
Thank you.
All right, let's take a break now. When we come back, we'll head to the markets to stay with us. Welcome back to Watching Business Morning right here on Channels Television. Now I'm heading back to, or handing over to Lagos now. Anyete Edet is still in Lagos to give us a summary of how the market fared yesterday. Anyete, I hope you missed me a little bit just being right there in the studio in Lagos.
Yeah, good morning, Ini. Well, I'm starting first. For the stock exchange, it was another positive close for the stock exchange, and of course, when for the markets, we saw that the Nigerian Stock Exchange it closed rising into the 72 points. But I'm looking at the unlisted securities market. I'm making a little bit of change this time at the unlisted securities market, which is almost like the stock exchange. But here we have the unlisted securities. It was up by 1% in contrast to the decline that we saw previously. We saw a 0.33% decline, but this is how the market closed at in Tuesday's trading session. Market cap still in the 1.2 trillion naira level. You know, this market it's not been mentioned that much because not much of activity goes on there, but it's still a market under our coverage. We still have investors putting their money where their mouth is in this market. This is the other side of activities on the market. The volume of trades there, it declined by 93.37% to about 3.73 million units, and then the value was also up by some margin, but about 92.6 million naira was the value of the trades there, and in total number of deals it was 24. And this the gain that you see on that market is largely attributed to the likes of Double One PLC, which was previously listed on the Nigerian Exchange Limited platform, but then was recently had been delisted. Then the Central Securities Clearing System, it was another gain, the massive gain, 3.17%. Double One had gained 9.57%, while Friesland Campina, the third gainer, we had three gainers in that market, which contributed to that market's rebound at the close of Tuesday's trading session. Friesland Campina was up by 1.82%. Now I'm going straight to the fixed income market, which we saw the Treasury bills as well as the bonds market. They were in the bullish session. But let's talk to our analyst, Jennifer Audu, who's a research analyst at Meristem Securities. Thank you for joining us, Jennifer.
Thank you for having me. Good morning.
Yeah, I know we're having your first time here, but I know you do your job very well. We had, on Monday, there was a bonds markets auction by the Debt Management Office. I'd like you to give us first the results, the outcome of that bond auction, and then today there will be a primary market auction at the Treasury bills market, which is the fixed income market. So give us first the analysis of that bond markets auction carried out on Monday.
Okay, so at the auction, bond auction that was held on Monday, where the federal government intended to raise 360 billion, we saw investors buying interest majorly on the longer end and the shorter end of the bond of the bond market, of the instruments. So consequently, due to robust system liquidity, we saw buying interest on the 2053 instruments, which is at the longer end of the curve. We saw stock rates decline from 18% to 17.2% at the end of the auction. And on the shorter end of the curve, we saw the stock rates on the 2029 instruments decline from 16% to 15.5% after the auction. And after the auction again, we saw that subscription level bid to offer was really high at 2.9%, with total bids at over 800 billion at the end of the auction.
Okay, so that's okay.
Looking at.
Go ahead, please.
Okay, looking at today's Treasury bills auction, we expect liquidity to be the major driver. So consequently, we expect moderation across the true instruments that's been offered. Then considering the fact that what is being offered, the amounts being offered is relatively lower than what was offered last week. What is offered this week is over 13 billion, and what was offered last week was over 104 billion. So we expect to see lower stop rates at the end of today's auction across the true instruments.
Okay, so that's both the Treasury bills market and the bonds market. Now, on Friday, the National Bureau of Statistics is expected to release the November inflation report. Remember, inflation is still a very, very topical issue, particularly in Nigeria here, where high inflation rate is taking its toll all across every spheres of the economy. Now, what are the expectations if the inflation number comes in a little bit higher, currently at 27.33%, and we're expecting it to go higher about within that higher about that range, still in the 18-year high. Now, how is this going to affect the market and investors?
Okay, so ideally, with the expectation of higher inflation number, we would expect that the monetary policy would hike rates in order to curb the inflation, bring inflation to target levels. But so far, we haven't been able to see the link between inflation and the fixed income market. So we consistently we expect activity levels in the fixed income to remain the same, to continue on the same trend without any impact on the inflation numbers.
Okay, thank you so much, Jennifer. I think we'll leave it there and then keep our eyes and expectations for the inflation number due to be released on Friday. Thank you so much. So that was Jennifer Audu, research analyst at Meristem Securities, giving us details about the fixed income market. Now let's move over. Let's move over to the Nigeria's Exchange Limited. There you have it. The market is still climbing almost into the 72,000 level, 71,907.26 points, up by 0.33%. In terms of value, that means nearly 130 billion naira was added. This market all the way from about 36 thereabout when it started the year, and then currently at 40.3% in terms of its performance, or what you call the year-to-date return, which means this market is going to most likely, we have just about 18 days to the end of the year. So if it continues this trajectory, it is likely to hit a 72,000 points, which is another multi-year historic high. And then let's take a look at the sectoral performance for the market. It was a mixed picture there. The banking counters had it. They were the major reasons why this market was up. And in addition to MTN Nigeria, which was a major factor for that market. So, Ini, that's it for that market. We'll be giving you more details in tomorrow's trading session.
All right, Anita, thank you so much for that. And we'll see if your prophecy will actually come to pass, talking about the market hitting 72 before the close of the year. Let's head over to London now, where Juliana is standing by to give us update. Juliana, good morning. And Prime Minister Rishi Sunak should be celebrating, but I think his celebration is half-hearted because the battle might have been won, but the war is not over. So even though he's won now, talking about obviously the Rwanda bill, the migration bill, but I mean he has made a promise to effect some changes before he can get a full support of the lawmakers of the House.
Ini, you're absolutely right. In fact, how you've just described the past 24 hours in Westminster is literally what is being written all over the front pages this morning. I think the Prime Minister certainly breathed a huge sigh of relief last night because, of course, he managed through a day of pretty tough diplomacy get the second reading of the Rwanda bill passed through the Palace of Westminster. Now, of course, we know, as you quite rightly put it, he has won this battle, but certainly he has a huge war ahead of him because the Tory party, the Conservatives, are completely separated and factioned at the moment. There are those on the extreme right who are not happy with the bill. Many of them we were expecting to vote against the bill yesterday, but it shows you what a hot cup of tea and bacon sandwich can do, because they didn't vote against it. What they decided to do is to abstain from the vote. And then you've got those on the left who think that perhaps the vote is the new bill is just a little bit too extreme, and they want to make sure that as it passes through local committees in the Palace of Westminster and then it's elevated into the House of Lords, that Britain do not break international law, and that there will be an opportunity for any asylum seeker or refugee coming through the channel, whether it's via a dinghy or in the back of the lorry, a chance to appeal. Because yes, we know that there are human traffickers taking advantage of the porous borders, but then of course we know that there are people who are coming into this country because they are running away from really difficult situations. So, he's stuck between a rock and a hard place. On the one hand, he's got to appease the One Nation Tory sect, but then of course the extreme right, they are seeing this as a new Brexit, and they don't think that the bill goes hard enough. This is led by Robert Jenrick, who was the immigration minister. He has seen the legislation through and through. He has lived and worked through it for years. So the fact that he is telling MPs that it is just basically not workable is not a great sign. And then, of course, we go back to Monday, Inni. Rishi Sunak, the Prime Minister, was sitting in front of the COVID-19 inquiry where some of his colleagues called him Dr. Death for the Eat Out to Help Out scheme. So it's not been a great week for the Prime Minister. There are still several issues that he will have to face. It's probably worth mentioning, which was a huge story yesterday, although I do think the British media are playing it down, that an African gentleman, we don't know exactly where he is from or his age, but committed suicide at a barge where the British government have been housing asylum seekers. So not great headlines, and a really serious case of death yesterday at this barge. This barge was just launched a couple of weeks ago. So this is basically a piece of property that's sitting off land on water. Human rights activists already said that, it was completely unacceptable. Not sure whether or not there could be Legion's disease or any other disease that asylum seekers could get whilst residing on that boat. But yesterday, the first life was lost from that, and we believe that the person took their own life. So this is a huge headache, and this is Britain. It is still a very tiny island, and Rishi Sunak promised at the beginning of the year that he would stop the boats. He can't stop the boats. The Rwanda scheme seems to be, in tatters. However, it did pass the second reading, but, like I said, the British media are saying after Christmas that they're going to deal with the Prime Minister. So let's see how this plays out.
All right, Juliana. Well, a whole lot of perspective there to this issue, the issue of migration and all of that. And I know another major issue is the COP28. Now the fight on words, transition from fossil fuel and all of that. But Ladi will have to handle that with you during Business Incorporated. So Business Incorporated at 1:30. So we'll talk to you then. Or Ladi will talk to you then.
Thank you. Thanks, Annie.
All right, and talking about Ladi, he comes on now from Lagos with his crypto numbers to see how investors have been faring in 24 hours. Hi, Ladi.
Yeah, Inni, definitely very interesting having you all the way there in Abuja and missing you right here in the studio. We've given you all of this real estate, but since you're in Abuja, I'm sure you're going to be buying me kilishi when you're coming back to Lagos. But let's take a look at how the market's looking. Talking about the crypto market now, we see Bitcoin $41,015 this morning. We're still seeing profit taking right now in the market. It's come a long way from about $38,000 in December, starting December. And there we have it there. Did touch 44,000, but we're seeing a lot of pullback right there. Ethereum, $2,169. And yesterday we got that US CPI data for November. If we take a look at the data there, we see CPI year on year was estimated to come in at about 3.1%. It did come out at a 3.1%. If you can put up that data for me, for the US November CPI data, we see the forecast was unchanged for the month-on-month level there. CPI month-on-month, we see 0.1%, came in a little bit hotter than expected. The estimate was about unchanged for the CPI for the month-on-month level. That's coming from October into November. Core CPI month-on-month estimated at 0.3%, came in at 0.3%. So not a bad data looking at the US November inflation numbers. But let's bring in Olumide Adesina now, financial market analyst, to bring us up to speed. Great to have you, Olumide. So we see the data there. What is likely to occur when the Fed session wraps up today? It's definitely the last one for 2023. What are you expecting?
Actually, it's the last and the most important one in the year, and that's because the US Fed is going to round up their narrative about interest rates. Definitely, the market has already anticipated that rates will hold, but the narration is that will it go hawkish or dovish? Market pundits wonder that if it goes hawkish, then Bitcoin's longevity at the 40,000 support level might be a matter of short term. But if it goes dovish, then definitely Bitcoin might push up above the 42,000 once again. But interestingly, I think what's really rocking in the crypto markets right now is BlackRock's adjustment, ETF adjustment, where Wall Street banks can participate, as an active participant, and that will definitely bring in much liquidity because prior to the adjustment, it was only proprietary trading firms like John Trading, Jane Street that could take participation, and that also would pretty much add the much needed boost in the crypto market. Also, El Salvador also introduced Freedom Visa for investors that have a net worth or investment of at least $1 million in Bitcoin or crypto assets to boost the economy, and that pretty much tells you how diversification is happening in the space, Ladi.
Investors care about, as investors in the crypto market, do you think they care about the outcome of the US Fed meeting today?
I think not really, because this year has been quite wonderful. Solana, for example, has been the surprise this year. This is a coin that at some point was trading below 10 and had gone above $70 before moderating at 66 as we speak. That's 5 years. Look at Cosmos, look at Polkadot in the last 24 hours, it's up by more than 10%. So I think, while you could say the US Fed meeting will definitely bring some cautious optimism, I think this year has been quite a stellar run for major crypto assets, Ladi.
Yeah, definitely a good run for investors who got into the market early, that's for sure. Thank you so much, Olumide Adesina, financial market analyst. Thank you.
Thanks for having me.
All right, so that's how the market is looking, Ini, all the way in Abuja. Can't wait to have you back right here in Lagos.
Yeah, I'll be back, Ladi, and I promise to bring back the green to your Bitcoin and other crypto coins. I'll just pick it up on my way and drop it when I get back to Lagos.
Yeah, definitely waiting for that. Thank you so much.
All right, Ladi, see you at 1:30. All right, so that's it on Business Morning. 55 minutes of current and relevant business conversation. Doesn't matter, where it's coming from, but you can be sure to get 55 minutes of relevant and current business conversations. So do it again tomorrow from Abuja. Of course, have all those inputs from London, from Lagos, and we'll bring the current conversations to you right here. So have a great day. Join Ladi at 1:30 for update from the world of business. Have a Business Incorporated. I'll see you tomorrow from Abuja again. I'm Ini John Mekwa. Go out there, make some money. It's very necessary.